All righty, well, let's get going. Welcome to the, what is this, April 17th version of this industry update. We are now halfway through the month of April. And as you can see right here in this chart, our month-to-date number for April is showing a meaningful drop. If we just look at the colors here, we see a lot of days here, especially in the past 10 days or so, where the red fell below the gray, and that winds up resulting in a drop here. So it's interesting because just for kicks, I took a look at what the S&P 500 was at the beginning of the month and what it was today, and looked at the difference, and it happens to be 7.5% off. So it's ironic and I think coincidental, but it's interesting that that market indicator and the charter market happen to be off by the same amount for this month. Typically, in my experience, the two, like the financial markets and the charter market, are tied, but the charter market tends to lag the stock market. So if there's a drop, the market tends to do better for a while. And conversely, when the market recovers, there's usually a lag before the charter market recovers. So it's a little bit interesting to see this manifest itself as closely to, sort of as closely correlated as it is, because I haven't seen it be this closely correlated in the past. But that is what we are seeing here for the aircraft that we track as Part 135. Rolling forward, this is just what that looks like on a year-over-year basis. So we are seeing it was a little bit of an uptick last month over February, and now, at least for the mid-month here, we're down. So we'll just see where we wind up for the end of the month. When we look at our Part 91 trend, a little bit different because we're still tracking up by 1.5%. And just as a point of clarification, the Part 91 data that we show here is inclusive of Part 91K, so that includes the fractionals. So obviously that 1.5% up just results in kind of a level line here when we look at it across the board. And then that also moderates the decline when we look at it, as combined traffic. So we have a little minor dip there in combined traffic. For those of you on the call that are in the FBO world, we are, the charter 7.5% did overtake the 91. We're off slightly in aggregate across all traffic types. Looking at the various size classes, here is the light jet. This category has had a tough first quarter. You can see just looking at the red line versus the gray line here, it's been off for almost the entire first quarter, and this is no exception. Mid-sized jets that were doing better. I mean, it's just everything is off a bit, but you can see that we're still in positive territory on mid-sized jets in the first half of April, up 0.9%. Here are the super mids. Interestingly, that they're down. We had a few days here that have contributed to that. So super mids are off by 6%, which is quite a turnaround. And then here are the large cabin that are up 0.2%. So the mids and large cabins are the categories that have done the best in the first half of April so far. And then turboprops have just been off significantly for the whole year. Looking at our major metro markets, this is LA, including the airline traffic. When we pull the airline traffic out, this airport is still up 9%, which is an interesting data point, especially because when we look at Van Nuys, it's the opposite. And so we're down 10.7%. Month to date, you can see there was a big spike there last year. I'm mad. It has to be a special event of some sort. I just don't recall off the top of my head what it was, but that's responsible for a fair chunk of it. Here's LaGuardia. The big dips there are the weekends, because this is a domestic airport. Any airport you see that's primarily domestic flying, you generally see a big drop on Saturdays, and that's the case. Traffic is up year over year, 3.4%, and that is pretty much all airline. There's so little GA, BizAv that goes into LaGuardia. Here is Teterboro, which is really our BizAv airport for the New York metro area, or the predominant largest one. And you can see that year-to-date trend is still positive at 1.4%, but the month-to-date is off at 3.9. So we're seeing a little bit of a softening there. White Plains, interestingly enough, is the opposite. So we're showing 3.5% up against against a 4.4% trend for the year to date. So it's off slightly from the high, but still in positive territory. And here's Farmingdale that's doing exceptionally well, up 12.9% for this month against a 9.9% even year-to-date trend. Morristown also clocking in with positive territory. So it's really just Teterboro that took a hit on the charter side. Here is Chicago Midway, all traffic. So that's including all the Southwest going in and out of there, off 7%. When we pull out Southwest, it actually flips, and now we're in positive 3.9%. So there's a second city that in aggregate is also doing okay. However, it's a different story when we get out into the suburbs. Milwaukee is off 13.5%, which is quite a drop, but still in positive territory slightly for the year to date. Here is Atlanta. So obviously heavy airline airport, still showing positive trend here, up 1.7%. Very different story when we pull out the airlines and just show the GA. But of course, the GA traffic into and out of Hartsfield is not really the biggest BizAv airport in the market. Peachtree would be the airport there. And when you look at that, I mean, the flight counts are about 6 times higher, and we're showing 8.2% higher with a nice spike in here. Looks like just last week. And then here is Boston, all traffic, where we're seeing a 7% year over year. That's including all the airline stuff. Looks like international travel out of there has been on the rise. And then here it is when we pull out the airline stuff, we're still showing a 9.6% year over year gain, which is good to see. Not quite the same story out of Bedford, where traffic is off 8.6% month to date, with a 2.2% drop for the year to date. And then here is Reagan, which has that same Saturday dip, and it's just not quite to the same degree as LaGuardia, posting positive. So there is some stuff there. Now, when we look at Dulles, it's like a whole different deal. There's a heck of a lot more traffic in and out of there. This is with the airlines. When we pull out the airlines, we're still in strong positive territory, 19.2% for the year, 8.3% for the month. So a lot more business aviation traffic going in and out of Dulles than we saw this time last year. Manassas is also up 13% and 17.2% for the year to date. So the DC area is getting a heck of a boost in traffic compared to last year. Here is Charlotte, which has been up pretty significantly, even on the airline side, for the whole year to date. And it looks like it dropped just recently. However, the GA side is still in positive territory at 3.9% with 7.9% year-over-year gain for the year to date. So getting into what we call second home cities here, we're still pre-season in the Hamptons, single-digit flights there. It's showing a 17% increase, but really we're early in the season. I wouldn't put a lot of credence into that at this point. On the other hand, Aspen is heading from peak down to off peak, and you can see the line coming down, still in positive territory. This is with the airlines. We pull out the airlines and we wind up in slight negative territory, off 1.6%, but we see that seasonally things are always dropping this time of year in Aspen. And then here is Eagle doing the same thing. This is with the airlines. It's kind of the opposite there, where we were seeing a decline with the airline traffic in Eagle and an increase with GA and vice versa in Aspen, but by and large, we're just seeing the end of the season there. Here's Denver Centennial, which is showing off 3.4% for the month compared to 2% positive for the year to date. Here's Nantucket, same story as the Hamptons and Martha's Vineyard. Again, we won't really worry about those guys until we get another month or so in there when you can see that we get into peak season for all of those island destinations. Napa out on the West Coast, it had a significant drop off here, off 17% for the first half of the month, compared with 0.3% for the year to date. That is only, what is that? It's about 100 flights, give or take. So part of the deal here is just overall volume. Here is Bandon Dunes also showing weaker volume, off 9.3% compared to a 3.2% increase for the year to date. So a little bit of softness out there. Scottsdale, which generally has just been a market that's been increasing over time. It's certainly popular as anything, is off 1.3% month to date against 3.1% positive for the year. And then here is Jackson Hole, that also has been having really strong results in the BizAv traffic category, up 10.3% for the year, but off 4% for the first 2 weeks. So you can see that, there are some of these destinations that have been historically done well are off a little bit, and Washington, D.C. is busy, if you just kind of sum that up. Here is Hilton Head, strong, up 2.7% for the month to date and 5% for the year to date. So it's off a little bit from the peak, but still doing all right. Now we have our next set of cities here with Addison in the Dallas market, up 2%, beating its year-to-date trend of 0.7. Dallas Love with all the airlines and then without. So you can see a little dip there off 3.4%, which is hurting the 1.9% year-to-date trend. Opelika rolling down into Florida, up 6% against a 5.3% trend. So improving the year-to-date there in the first 2 weeks of the month. And then Fort Lauderdale International for all traffic and Fort Lauderdale International for GA. If, one of the things you'll see as we get into these other airports, this spike, I think, is a direct result of the TFRs in West Palm that are having the opposite effect on traffic in West Palm. When we look at Fort Lauderdale exec, we are showing a positive here, up 3.5%, which compares with a 0.5 point decline on the year-to-date basis. And then Naples on the other coast, you can see we're up 2.6% against a 6% positive trend for the year-to-date. West Palm, all traffic, we are off 13.6%, so that's with all the airlines, and then we're off 28.1% for the first half of the month for just GA, and you can see those spikes in the downward spikes there, which are a direct result of presidential TFRs. So Palm Beach is just going to be dealing with that for a while. Here is Nassau, which is posting really nice month of April for the first half, up 7.2%. And that's against a 4.3% year-to-date number. So when we look at our top 50 routes, let's get to the most recent week. Here we go. You can see that Augusta made it in there a little bit. Otherwise, we're seeing our typical routes. We're seeing our Teterboro to Opelika and vice versa taking the top 2 slots, which is to be expected. The Transcon stuff is pretty strong at number 5 with Teterboro to Van Nuys. Van Nuys to Las Vegas is in the top 10, which is pretty typical. So there's nothing really surprising in here. We're seeing a little bit less of the islands. I mean, the only international destination that made it is Nassau into the top 50 this week. And we saw that, we saw Mexico and the Caribbean showing up earlier this year. And I think we will start to see the north-south corridor taper off because we're getting to the end of the season there. Let's roll forward to fuel. And here you can see last week, everything was in the green. Prices were going down, or last period, which is 2 weeks ago. This time it's with the exception of Minnesota and Iowa and Hawaii, things have gone the other direction, and New Hampshire probably had the largest jump with a 32 cent per gallon gain. And then here we have just the overall prices where Colorado, Alaska, and Rhode Island continue to jump out as being some of the most expensive places to get gas. It is interesting to see that only Rhode Island and Alaska are above $7 a gallon. The average is coming way down into the fives. You know, if we looked at this a year or more, it would have been much higher than this. So that's it. That is the deck for this year, or this period. If anybody has questions or whatnot, please feel free to either unmute yourself and speak up or jump onto the chat there. I can go back and look at another chart if you want. You know, I think just a little comment on the, you know, what we're seeing here. You know, uncertainty is always bad for charter in my experience. And so it's really that more than, you know, I mean, I think the folks that fly privately are insulated from a lot of the direct results, but when there's so much uncertainty out there, there is just a sort of a holdback that I've always seen when these things happen. They just aren't as bullish. They don't, it's not that they don't fly, they just don't fly as much, and they think more carefully about what it is they're doing, and it tends to translate. And with what we have going on, I mean, it's interesting when we have companies saying they won't forecast and you know what they're not willing to predict what's going to happen for the rest of the year at the moment. I'm sure that same sentiment sort of finds its way down into, you know, the folks that are making decisions on whether they're flying or not. And hopefully, you know, this whole thing kind of resolves itself in the next, you know, weeks, or, you know, the shortest term possible, because when when our leaders out there that fly privately have confidence, that's when they pull the trigger on flying privately to the greatest degree. So there could be a bounce here if this all gets resolved quickly. And personally, that's what I'm looking for. So anybody have any? Okay. Malachi just pointed out that Aspen, if we go back and look at that, you'll notice that every year Aspen shuts down next month. They just closed the place for, what is it? It's at least a week, maybe a little more than that, but they shut it down and do runway maintenance, and that's coming up. So yes, that is a heads up for everybody. When you look at the charts, there's always sort of a flat line there because there's no activity. So thanks for that, Malachi. Anybody else have any thoughts, tips, comments, things you're curious about, slide you want to see again? Okay. Natalie, if you want to shoot me an email, greg@tivoli.com, I'm happy to pull Bermudas. I can't do it right now in real time today. But if you want to shoot me an email, I will get that slide and send it over to you. Anybody else? All right. Well, thanks again for joining. I do this because you appreciate it. And I have recorded this, and I'm trying to get in the habit of doing that. So I'll post it to YouTube along with sending an email out that has a lot of the things we just talked about in it. That'll come out a little bit later today. We're finally getting our act together. I'm getting some help with doing that. So I will be able to post the bigger email the same day that I do these calls. Again, appreciate all your support, and we'll talk again. Actually, I think the next call is going to be May 8th. 2 weeks from now is May 1st, and that just isn't enough time for us to analyze the last 2 weeks of the month. So May 8th will be the next call. For those of you that have the standing meeting invite that I have in like an Outlook meeting invite, I will update that here shortly to skip the week. So that's the deal with that. All right. Well, thank you, everybody. Appreciate it. And we'll talk to you it'll actually be 3 weeks. All right. Take care.